is Karen Serem. I'm the CEO of DOB Equity. Founder is very, very, very important for us. And that founder commitment is one thing that we look at when we're trying to distinguish between one founder to another. So one key criteria that we've seen within our portfolio company that has very successful businesses is founder grit. That through funding winters, for example, which we had and we're still sort of recovering from, through this current war that we're experiencing that is actually directly impacting our companies, through foreign exchange depreciation of our currency risk as well. Do you have the grit to take this company through this? So how do we measure grit? We look at transparency, communication during that period, and continued engagement with your investors, with your team, with the market, even through this time when you're having the problems. Grit can also be looked at if you look at the track record of this particular founder. So we dig very deeply from when you started this, what else had you done before? How had you handled that? During different difficult periods, how have you handled that as well? As the business has grown, as the business has dropped, how have you handled that? And how much commitment do you have to this business that we know that no matter what, that you're going to do whatever it takes to ensure that this business works? That's one. Another one is integrity. For us, integrity is a non-negotiable. That if you have any challenges or issues, that this founder is going to communicate to us. If he has any challenges or issues that he develops which require him to move outside of what we believe is an integral way of operating, that he will stand true to what he believes, despite that decision having a negative impact or outcome on his business. So integrity for us is very important. Communication is another one. If you say you're going to do something, follow through. It's important for a founder to understand it's small. Say, I'm going to send you financials tomorrow, and 3 weeks later we're still following up on those financials. Or, oh, I've made a change on this particular material or document. I'm going to send through those changes in the next 2 weeks, and a month later we're still following up. So communication and follow-through is very important to us and really shows for us founder commitment in that sense. And a fourth one is the founder understanding where the gaps are and being very clear on those gaps, because it's not all smooth sailing. You're going to have so many issues, you're going to have so many challenges, but it's good to not sugarcoat exactly what is happening. Understand that, yes, I'm having these challenges, but I'm going to communicate on these challenges so that there's no surprising your investor. I think investment readiness is a very subjective term. Investment readiness for DOB Equity will be very different from investment readiness for a different fund, depending on what stage that investor is coming in to invest. Some investors are happy to come in at the pre-seed stage. Perhaps you have no traction, but you have a clear understanding of what you want to do. Some investors want to come in when there's significant growth and you're profitable and the team is completely complete. For us, when I look at investment readiness, it's more around, does this company need the money? That they've started their business, they've started generating enough traction, some revenue, they have clear proof points about what they're doing, they have a clear team in place, key positions are filled, and even where they're not, that they're very clear on, yes, this is our recruitment timeline, this is where we want to identify as a gap that we're going to recruit. So for us, investment readiness means that you've understood exactly what you need, you've understood what type of funding you need, whether it's an equity investment that you need, whether it's a loan perhaps that you need, so you need more debt investors to look at that, or you're very early stage and perhaps it's more angel investors or some sort of concessional funding that you need. So you've gone through that funding study for yourself, reached out to investors that are relevant to whatever businesses it is that you're looking at. You have a clear understanding of where the gaps are for you and where that money is going to be. So from a funding use perspective, it's very clear that whatever capital we are putting in is going to add value in XYZ sector. It doesn't have to be a profitable business. It doesn't have to have all the answers already in place, but there has to be clarity towards what you don't know and how this money is going to fit out of what you do.